Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Curt Queyrouze, the president of Coastal Community Bank. Curt and I cover a lot of topics, starting with his family connections to the banking industry and his long tenure there, how he came into banking. We dive into some of his beliefs about AI, the future of AI, the importance of engaging in Fintech partnerships for community banks, why they've engaged at Coastal, and quite a large number of them, how they manage those and have gotten better at managing the Fintech relationships and processes, both relationships and due diligence processes over time. And we dive a little bit into what brought them to build a site in the Metaverse, why they think that's important, and what they're learning from it. It's fascinating. It's probably the first Metaverse banking experience I've seen, and of course, went and experienced after talking to Curt. We covered a lot of ground, a lot of interesting, innovative topics that are on people's minds. So I think you all enjoy. So please enjoy this conversation with Curt. Curt, thanks so much for joining me today. I appreciate you making the time, and welcome to the podcast.
Thanks, Jeff. It's great to be here.
I'm looking forward to this conversation. We had a wide-ranging conversation in advance, but I kind of like to start with all my guests just talking about how you got into the business and how you got to where you are. And you've got a little bit more history in the space than most I talked to, so it's great.
Yeah, so you just called me old is what I heard, but that's okay.
I meant like you've been involved in this. It's like a family business for you, right? Like you came by this profession, honestly.
Yeah. So yeah, I did because my dad was a banker, and a small community bank in New Orleans where I grew up. And so, as a teenager, not my first job. First job was just out there, the proverbial digging ditches as a laborer, kind of as a teenager. Mm-hmm. But somewhere along the way where I think I was about 15, 16, my first job at a bank was sitting in the back office of his bank, running a coin counting machine and stamping mail. And then, at some point I graduated to the microfiche machine and the proof machines. Eventually then I became a teller, and I worked as a teller through college and, graduated in accounting. But despite that, I remember I was in college and I accounting major, and my dad said to me, at one point, he says, "Son, whatever you do, don't be a banker." And of course, that solidified in my head because I was the rebellious teen, with that kind of head knocking relationship with my dad. And it's like, so in my mind, I remember, I'm going to be a banker, and I'll be a better banker than you ever are, and so that put me on that path. I don't think that was his intention, but, got out of college, went to work for one of the biggest banks in the country at the time through a management training program in the early 80s. And, so now I've been, and, if you count that college graduation, I've now been doing this for 40 years, and which does make me old. So, or at least even at my age, I have a 10-year-old son, and he told me, "Don't worry about it, Dad. You're not old till you're 65. I said, "Well, that's good to know, son. Thank you." So I know where the line is now.
Well, your son's got to call my sons, because my sons are pretty convinced I crossed the line a long time ago. Every gray hair they pops in, they go, "Hey, Dad, you're looking pretty old, man." Okay, right. Doesn't matter. I was going to ask, have you ever taken that reverse psychology experience and actually tried to apply it in the positive with your own kids? I always think I should tell my kid not to do the thing I want them to do, but I always worry it'll backfire on me in the one instance where I want it to work. You ever tried to use that in your favor with the kids?
I can't think of any time, but because I'm a bit, sarcastic, right? And so as my kids grew up, it's funny to watch young minds try to do sarcasm because it doesn't come out as sarcasm. It comes out as mean. So I've tried to kind of temper my sarcasm. So I think I'm kind of stay away from the reverse psychology in case I might teach them something that they shouldn't be doing. So yeah, I kind of temper it.
Yeah, I always think about using it with my teens, but then I go, I don't know if I tell them to do the thing I don't want them to do, and then they do it.
Yeah, then you're like,
then what do I do?
The funny thing, so go back to my dad is, so I got into banking and his bank actually ended up failing. It went under in the early 90s, so some years later. And it was just a big downturn. He had too much real estate concentration. But I was still early in my career, and then he just suddenly died. So, I never got that chance for him to watch my career Because when he passed away unexpectedly, it was, I was still in my early stages. So, yeah, you always wonder, what he would think about the twists and turns that I've taken, because I've gone from, I've been in lending for a long time, commercial lending, corporate lending, then, worked for a startup, on the credit side. And now, I'm working president of a bank that's deep into the banking as a service, right? And partnering with Fintechs and so more of that technology stuff. And so it's been an interesting path. And, now when I got to the role, he was president, CEO of his bank. And when I got to that role, it didn't feel the same like what he was as a banker, right? I mean, everything was face to face. And I remember the first teller job I had at his bank. If somebody came up to the teller window that I didn't know to cash a check on the bank, we didn't even have an online system, a dummy terminal that I could check. I had to go to a dot matrix printout on a counter behind the teller cages and look up the account by hand, right? And then match it and see if they had enough money as of yesterday's close to cash the check. So, as far as technology goes, I mean, I've watched all the evolution, and it's interesting because it's an industry that's always been deeply embedded with technology, but, now we're in a whole different space.
Yeah, I want to dive into your fintech partnerships, but first, the comment you made about it, it didn't feel like it did when he was in that role, and it always reminds me that there's two elements to that. I'm curious your thoughts on them. One is the world changes between A and B, and the nature of the role or the experience is different. But I also think there's particularly for younger employees, more junior employees, I'll say, looking up the chain, and you kind of have this perspective of what it must be like, and that person knows all the answers and has the confidence and does whatever. And then, like, when you sit in the chair, you go, it does not feel, sitting in the chair, the way I felt that it was when I was looking at the person sitting in the chair. It feels very different. And so that, I don't think that's just because the world has changed between A and B, but the experience of sitting in a given role, I don't think ever feels like what people think it feels like, particularly younger employees who are looking up going, hey, it must be amazing to be there. And you go, it's a little different than when you actually get there. It never feels like what you expect it will, I think. At least that's been my experience.
Yeah, I agree with you 100%. I was surprised after a while when, after I'd become CEO of the bank years ago. And, after some time, you realize, like, gosh, how I am spending my days, and it's just completely different, right? I mean, just things like dealing with the board. Everybody, if you've ever been a primary contact for a board of directors, that's a whole thing in and of itself, right? And then people that aren't doing that don't understand that's a job in itself, managing, right? If you're privately held versus publicly held, and I've worked in both environments, you either have, if you're privately held, you have a key stakeholder that's, got their own personality that you have to deal with. If you're publicly held, you got the markets to worry about. And you more and more of that stuff comes away from just fundamentally the job that you did to get there. Mm-hmm. And I always tell people when they're at a certain point in their career, when they're making that shift between management and leadership, and it's like, when you turn to be if you want to be a strong leader, you got to stop doing the work you were doing, right? To some large extent, right? Mm-hmm. So if you made it, for me, I made most of my headway was being a credit, person, right? Hunter Skinner, finding credit, corporate business credit, and then a mm-hmm. credit executive, and then, so on another side of it. And you get to a point where the mechanics that got you there, things that got you to that position, you have to let somebody else do. You have to lead them, and you have to point, because as a leader, you've got to set vision, right? Remove obstacles and marshal resources. It's as simple as that to me. So, that's the hardest thing, because the work is different. And technology, I think we can see the same thing, right? It's like, if you go into work every day and your whole world is spent in your inbox, then something's wrong with your work setup, with your infrastructure, right? Mm. So people will feel they'll be buried in keystrokes and things all day, and they'll go home and they're tired. It's like, oh, I worked hard today, but did you move anything forward? Yeah. Right. And if you didn't move anything forward, did you really do what you're getting paid to do? Right?
It's a hard question. Yeah. I always tell people, if you, your inbox is somebody else's task list for you, and you don't want to spend too much time accomplishing somebody else. That's a whole bunch of other people's priorities for what they want you to do. And maybe they're the right ones, but it's your job to figure out what the priorities for you to do are based on your responsibilities and goals. And they may or may not be
similar to, I was going to say similar to what I've called it, which is the ping pong match, right? You just kind of keep hitting the ball back and forth. And, somebody's got to point to an owner and say, you go do this, right? And then report back. Yeah. And hopefully in an automated way, not an email. But
I feel like we're getting to the best career advice eventually. Because one of the things that I've always found is like being willing to be the owner, to step up and go, I'm not going to ping pong it back or give you an opinion or say, I don't like that, but say, hey, I will take this and own it and finish it and bring you a completed product is a really powerful, it's risky, right? I mean, it feels risky to do because you don't know how always that you can manage it, but there's a lot of power in it. Some advice for me to younger people is like, if you're willing to take on that responsibility, I'm just going to take this thing and solve it and manage the back and forth and come up to an answer. There's a lot of value created in the people who are willing to grab a hold of things and do that. Because there's a lot of like, I'm just going to throw my 2 cents into the ether and like let it ping pong around and go to other people, but nobody wants to own, come into resolution on a question or a debate or a problem. And that's like a lot of power in being willing to do that.
Yeah, I think, when you think of automation and in banking and a lot of industries, right, we think we're digitizing, right? How do you turn into a digital organization, right? I think at the core, in the back of it, for me, is there is a deep ownership necessary when you're doing this. When you're making that transformation, what you find is that finger pointing and bouncing things back and forth across the wall feels natural because banks kind of devolve probably into deep silos. I mean, you look at traditional banking, it's very siloed. And then when you look at modern frameworks like Agile and things like that, right, it tries to break that apart. And when it works, it's amazing to watch self-forming teams and teams coming together and people taking ownership. And when people aren't scared, when there's a safe space to take ownership and fail at it or run into obstacles, but fully informed, and then you have the ability for leaders to then help move things along and get it going in the right direction. That kind of forward production is amazing to watch when it gets traction. And it takes just what you said, right? And I've been saying this for years, ownership, deep ownership. Don't be scared. If you have people that take ownership, career advice, here you go, right? Be the one that raises a hand to own things. Take that risk because those are the people that leaders pay attention to, not the ones that talk the most in the meetings, not the ones that have the fanciest PowerPoints, but the ones that actually will take a burden, own it, and get it to completion.
All right, we've wandered a long way, but you mentioned the kind of fintech partnerships, and I think it's true that you have more fintech partnerships than you do branches. So you guys are you talk about banking as a service, but talk to me a little bit about your approach and how you view, why you've pursued that number of fintech partnerships and how you think about them and managing that.
Yeah, from the Coastal Community Bank comes from a very traditional place, right? And right now we have 14 branches here, in the Snohomish County area up around Seattle, and very strong community bank. I mean, really strong. But as leadership saw and the board saw the transition, and being up here in this tech space probably helped. I mean, one of the initial stories that I really love is that somewhere around 2013. The Microsoft gaming division came and talked to the leaders here at Coastal and said, hey, we're thinking about offering checking accounts to the players, right? The customers in the gaming side. And this is, before BaaS, banking as a service, was, a term.
Yeah.
And so they went down that pathway, and it ended up not coming out to be a business model that ended up getting pursued, but it was an interesting kind of foray. And then the bank, as most community banks, I go to banking conventions. Everybody's like, we're going to find new revenue. We're being disintermediated, all the different threats. And slowly but surely consumers of all ages, right, are consuming more and more products from more and more places. And so your share of the wallet's going down. And so, Coastal pivoted to play in this space and try it out. Took the fundamentals of operating a good strong community bank and put those into play. And through connections, we've grown. We now have 27 active partners, and they range from fintechs from early stage all the way to mature brands, and growing, and we're still growing. And with it, you've had to kind of endure massive change, evolve into it, but really the view of acquiring and delivering. So coming from a family that has a community banking background, right? I still believe very deeply in community banking. When my dad did pass away suddenly, I went to his funeral and there were like over 400 people there. And I asked, one of his friends, like, who are all these people? And it's like, well, these are people that, your dad touched their lives, helped them out at some point, through the bank. And that's a lasting impact, and I think the opportunity is, can you take the best of community banking, which is really always fundamentally treated by getting to know the customer better, and take that into a digital sphere. And I think the way to do that is through modern technology, things like AI and ML and data management, and really getting to understand the persona, and then taking that very personalized kind of approach and delivering it. Well, the problem is, if you're a community bank, what budget do you have to create the new models, raise the money to go acquire customers, delight them, right? With the biggest cost, besides developing your model, is acquiring customers for a startup, right? Especially if you're doing it in a digital sphere. And I think so the pathway of joining the two has made sense for a long time for me. I know we've gone back and forth in our industry about, are fintechs and banks competitors? Are they partners? I think we're everything. We're all part of the same ecosystem that's moving forward, and we just got to decide how to play in that ecosystem. So Coastal made that decision and has been very successful at it over the last several years.
What's your advice? I mean, I feel like this is an area where lots of institutions are trying to build relationships or partnerships, and I often hear from banks and credit unions when I talk to them that there's this challenge. There's kind of multiple challenges, right? There's like, how do I find the right partner for what I want? How do I diligence, especially if, we'll talk about AI maybe in a minute, but if they're doing things that I don't fully understand and like I don't have expertise in understanding it. And then there's this third part, which is like, I see too many agreements, I think, that get signed, and then like, how do I go make this thing work and operationalize it and get to a rhythm? And so walk me through a little bit how you think you guys do that effectively, like finding the right partner, getting through understanding, not just first round, but like, is this a good partner, and managing those relationships for success over the long term? Because I see a lot of failures at every step along the way when financial institutions try and partner with, startups or fintech type companies.
Yeah, it's an evolution, I think, and it's still happening, right? We're still learning constantly. And as we are going through it, matter of fact, we're just talking internally about, having a refresh on our due diligence protocols, and kind of, because there's constantly new topics coming up. Of course, the regulators are great at throwing new things on our plate as well, and concepts we hadn't maybe thought about yet, or maybe we thought about but weren't ready to address. But I think the advice I would get is, there's a lot of strong players in there. First of all, get online and go on LinkedIn and social media or Twitter, wherever and start following some thought leaders and really start understanding the space better. I mean, did that years ago, connected and read voraciously and, learned as much as I could. So don't sit back as a leader, part of the leadership team, and find somebody young on your team that's interested in stuff, said, hey, go run with this and bring it back to us. I think that's not going to work. The second thing is, understand where you are. The problem with a lot of community banks, I think, when it comes to tech, right, they have an infrastructure that's not ready. So if you're going to do it, you can't have a glorified kind of IT desk with a leader in your background and think you're going to be able to go and start addressing all these issues. Because at some point, you're going to be dealing with data and data ingestion and data management if you're going to do it right. And you need a certain expertise. You don't have to build a whole development team. We do, and we will. But you don't need that. There's lots of intermediaries that can help you along the way. And then, get the good consultants along with you to kind of help you, kind of guide you in this. It's mature enough that there's experts. You have to spend some money. You have to invest in it to get there. And then experiment on a small basis until you get comfortable. And it's hard to give general. I do talk to a lot of executive leaders at banks. We feel at Coastal Bank, we feel we want to grow this ecosystem because we think it creates stability and certainty to this world. So we are constantly encouraging other banks to get in the space, which seems weird because you think, because I do have some other bank leaders that are in the BaaS space as such that's like, oh, we're going to go in early and strong and control the market. I'm not sure because I think it takes layers and layers of expertise and partnerships to get this done. I believe it's a deep and big partnership game. And if you're going to do that, I believe you need a strong ecosystem, which means strong players throughout that can handle all the various things that can come up. So, I think we're in a very infant kind of stage of this. We've got a lot of growth to go. I welcome a lot more people in, but invest in risk and invest in technology.
Invest in risk. And the other thing you mentioned that struck me was that you're in the middle of revamping your due diligence protocol. What occurs to me is I think for many institutions, they end up in the perfect is the enemy of the good. Like they're waiting to feel like they know what they're doing to get in the game. And I feel like you get in the game and you figure it out. Not that you don't want to have a plan, but that what do they say about plan? No plan survives. No battle plan survives first contact with the enemy. Like you're going to have to adapt to the reality. You're going to learn from doing. And so the best way to get good at it is to. So I was telling my kids, you want to get good at something, you got to do it. You're not going to start off good or having all the answers. And so I think that's something I heard in what you were saying is that the willingness to get in the game before you've got it all figured out and say, hey, we're going to learn, we're going to adapt. We're going to say, hey, this can be better. And we're going to improve and kind of evolve over time.
Yeah. I mean, you got to make sure everybody's on board, the leadership, your board, but go out there and, get on this continual improvement kind of cycle. But look, the first modern data platform that I tried to build in or our team, tried to build in 2016, I guess. Mm-hmm. 2 years later, we were ripping it apart and rebuilding it. And that means, $1 million investment. Most of it was, burnt. That didn't stop us. It probably, maybe it should have. I don't know. But that's this world, right? It's like we didn't build it for the use cases that we were actually going to end up, pursuing. And it's just a constant thing. And it's if you don't like change, then, retire, go find some other place to work. You don't have a choice, right? It's change or die at this point.
So I wanted to dive into two specific areas that you've got some experience in the fintech partnerships, but just in technology in general. The first was AI. You mentioned AI, ML. I think it's maybe next to crypto, the thing that you can't go to a financial services event or conference and not have somebody want to talk to you about positive, negative. Everybody's going to jail who does it, and everybody's going to die who doesn't. And the opinions are all over the place in terms of what this is. How do you think about the capabilities of AI, what its opportunities and abilities are to improve this system? Like, where do you see the biggest advantages for people who can find a way to adopt it?
Look, this has been said over and over again, so this is not original thought. Matter of fact, I don't think there's anything up here that's original thought, right? Everything's a plagiarism, right? And that gets to AI, particularly if you talk like Chat GPT and people, are criticizing that. But, everything in our brains we've learned from somewhere, right? And so every thought comes out of a derivative of somebody else's thoughts. For me, AI, and, so this is the statement. It takes you from looking in your rearview mirror to looking ahead, right? That's one of the most important things, and it creates that ability to really get, more and more progressive and individualized outcomes. And so I think for that, it's amazing because I played around with some of this new technology, and it's like I got on one piece of software not too long ago. I said, make me I think I typed in, create a 7-page PowerPoint or presentation about how execution is a critical component of innovation. And it was great, right? It created, the content, the copyright, the pictures, until I got to the 6th slide, And the word execution somehow translated into good copy on the last slide, but there was a picture and there was a woman sitting in a car behind the wheel of a car who had a bullet hole in her head. So it had taken execution, right, into right wrong place, right?
Wrong image, wrong visual there.
So there's there's a lot of crazy things that could come out of AI, but ultimately, it's super. What would have taken me hours and hours to write? So I'll come in and I'll clean it up, right, and I'll take out that picture, or maybe I'll leave it in and make fun of it and admit that it was AI that helped me do it. But either way, it just leapfrogged the ability then to do something like that. And so the productivity, and it's just like when Google came out, right? We had this debates about what it was going to do to education if kids could look up the answer to everything. And it was going to displace jobs. And here we are, and it's like it's a critical part of how we live our lives. It hasn't really upended or supplanted, but it's fast charges to more quality stuff. I'm a Star Trek fan because I watched the original episodes as a young kid, and but that whole premise of getting into a society where you're talking to computers and and even in the later ones you have data, the Android, right, next to you. That's a world that brings us to more quality, points us towards a more quality outcomes and more quality work. I embrace it wholeheartedly, but we have to balance it out. There was a congressman or senator, I don't know who it was, just yesterday, I think, read a speech created by AI on the floor of the House of the Senate, whichever one it was. And first time, but had asked it to create, a 200-word speech. But talked about the premise of, we need to think about this before. Right now, we're all languishing about social media and the effect on society. And I think he's got a good point. Is right now is to start to think about, there's no pureness about AI. It has good and bad. So let's really think hard about and just put guardrails, right, about how we approach AI, how we use it, because it's going to be a great accelerator, and it's already embedded in a lot more things than we even realize. Let's manage it well, help it benefit society instead of the harm.
Yeah, for sure. I'm curious if you have thoughts on the limitation when you talk about it being looking ahead as opposed to the rearview mirror. I think it's really interesting, but I also think we struggle with this as an AI first company, and we get a lot of questions about the macro. And my machine learning guys go, forecasting the macroeconomic conditions 9 months out is a pretty bad use case for ML because there aren't that many real variables. If you think about cycles, there's a lot of data points, but there aren't a lot of cycles, and they all look a little different. And it's a very challenging problem to predict. And lots of people have made and lost money trying to make algorithms to predict the stock market movement, which is one input into what the macro might be in 9 months. So I'm curious if you think about places where its capability to look into the future are really powerful and prescient and valuable today, and places where you go, hey, it's like our version of the macro. We go, it's just we can measure it, but predicting it is really hard, and something that maybe we think is not well designed for AI.
Let's talk about credit for a second, because there was an interesting thing that happened during the pandemic, and it's not PPP, right? But it's somewhat related. Bank I was at has a large equipment portfolio, so it's 18-wheelers, transportation equipment, part of the Relief Act, the regulators came and said, okay, you can offer deferrals to your customers, you don't have to count it towards non-performing loans on your books, right? So the big penalty for non-performing loan is what it can do to your ratios, et cetera, to capital accounts and things like that. So for the first time in my career, the regulators are saying you can go ahead and skip payments all the way, and I think it was up to 7 months, if I remember correctly, for your customers to help them get through this initial pandemic shutdown. And different banks took different approaches. The bank, our executive team got together and says, we're all in on this. So here you have truck drivers who their living is dependent upon being able to pick a load up every day, right? The economy ground to a halt. We just blanket went out and said, all right, everybody that wants one, we're going to give them one if they want to defer payments, right? Now, some banks said, oh, we're going to make them pay interest and they can skip principal. And, I'm like, well, if somebody can't pick up a load or if somebody can't go to work, that doesn't help, right? You might as well just leave it alone, right? So we allow customers to continue to extend them through the whole thing, right? And so we tried to predict out what might happen when we went back into repayment and the economy's rolling and everything else. We had no tools to do that, right? Really at our disposal. That's where AI, right? So what happened though was when we finally stopped offering that, put everybody back in the full repayment. So our non-performings and our past dues never did surge because I think at one point, close to 50% of our portfolio was on deferral. Wow. And then you went back into repayment and we expected past dues to surge and they didn't. It actually really helped beat this one external environmental challenge that the industry went through, but we had no data to prove it was going to work. But now with AI, we had data points. We could have taken those data points. We really could have projected and at least had some models to say, what are the factors we think are going to contribute to whether somebody will get back, into that ability to pay kind of good model, right? So those are the kind of things I think, that if we really look at credit, the other thing I think about is like, how can there's origination of credit, then there's management of credit, right? And we all focus on originating credit. But one of the more interesting parts for me is, and particularly we talk about like underbanked and high interest credit and things like that. Most of those are caused by a mismatch in funding, right? So temporary job loss maybe, or a big bill to pay, car repair, medical bills, something like that. So it can be isolated. Well, how can we create a picture around that individual that's more than FICO, more than payment performance, which are all historic, gives us a full picture, takes into account this thing, and then gives us a probability that that person's going to return back to regular payments once this event resolves itself, right? You have to build a model around somewhat, very tight cohorts or individuals. That's AI, and that's where, you can use all kinds of inputs. But just imagine if we could, instead of passing credit from institution to institution, a lot of fintech was born out of refinance, right? Which is basically taking ill-constructed credit and consolidating credit cards into a personal term.
Personal loan, yeah.
Yeah. It's expensive to acquire a customer. What if I could have kept that customer by just offering them, an adjustment, right? Maybe my credit structure could be variable. That's what AI could start to tell us, right? Can you vary payments? Can you vary interest rates? If somebody's, performance is positive, right? We all, if you're in credit, pool credit for a while, you understand about peak loss curves, cohorts, you start learning all those concepts. The truth is, right, everybody, you can look at any portfolio, you can find at some level past the peak loss curve, that mature season part, everybody would want to take that credit because you can predict very well what's going to happen, right? But the people that got into that credit, well, if they're the best, has their interest rate gone down? Has their payment terms gotten better because they are the better cohort of that whole group? Nothing adjusts, right? And eventually AI, all the rest of this will provide us that ability to do things. So I don't know. I love thinking about the what ifs when I'm in a hammock. I won't be around, my career to see a lot of this come to fruition, but there's tremendous use cases. But yeah, predict the economy over the next 12 months, bad news, very bad.
That's bad. So let me ask you about one more area, because I know you guys have made some investments in the Metaverse. And the Metaverse is one of these things that I have not really played with, but I'm curious about and curious where people see the opportunity. And you guys have actually done some stuff in the space. So tell me a little bit about, what you've been looking at or doing in the future that you see in the metaverse.
Yeah, so we built a world it's called coastalworld.com. So you can go in there and take a look. And it's basically, we've got, a dozen plus of our fintech partners on there, as well as Coastal Bank. And it's a gamified world that you have your avatar and you move around in. The idea for us is, a self-contained metaverse, but also one that can integrate with other metaverse players. We kind of looked at the space and it's like, do we want to go buy real estate in the ether? That seemed crazy. Do we want to take a bank branch that nobody really wants to go to and put a bank branch in the ether? No, that's my idea. And so, our idea, and this again goes back to having engaged with like Microsoft's, and Xbox, everything. I mean, one of the interesting comments out of that early experience was the biggest cohort of gamers at the time were 45 to 55-year-old women playing Animal Crossing, right? Females playing Animal Crossing. You wouldn't have expected that, right?
No. Nope.
People like to be engaged. So we have coastalworld.com. It's not in full launch, but you can go play. But even without a full launch, we have 600 to 800 users a day and an average engagement time where they're active on the site of 8 minutes. And so We've got their attention for 8 minutes. Well, think of the what ifs on that, right? Can you take that then and go into financial education? Can you build a PFM, a personal financial management tool around that not only takes the transactional data, right, that's underneath that comes from your checking account, your card spend and all that, but also allows you to, like, with your engagement and into the world, you get the kind of direct towards things that, are part of your future. So if you're engaging with the world and you're out there investigating, sending your kids to college or college funds, right? That's not in your transactional data necessarily today, but that's a hope and aspiration. So if you can start to build an ecosystem of a gated ecosystem where there's data, controls, where you can build and use AI to start to help formulate a real persona around the person, right? Where I can start to collect important data points and frames around who I am, where I want to go, what I want my financial world to be like, and, all that. Then you can really start to leverage those kinds of things in a world where you can attract more and more people to engage in that ecosystem. And the possibilities are pretty interesting for us. I mean, we're working behind the scenes on building some muscle memory in that space, trying to, build just onboarding for our employees, first of all, to see how does it work when we start engaging more and more into this world. And then, we'll see what happens with it. There's a lot of fun about it, but underneath it all, it does come down to data controls, data management, privacy, security. We believe in the data protocols where, you want to minimize the amount of data flowing, where tokenize and mask things so that, can I validate somebody's identity without passing their critical personal PII across the internet, right? And blockchain and all those things give you those capabilities. I mean, imagine in a credit world, if I could carry around a set of important data points about me when I apply for credit, right? How much I have in a retirement account, how much I have savings, do I have health insurance? Am I properly insured on my house, right? So that I'm ready for disasters. All of these things. And if you can start incorporating those into data models, then FICO becomes what? I don't know what FICO tells me anymore. It becomes probably the least useful data point if you can really paint a different picture.
Yeah, very interesting. It is certainly that idea of being able to carry around the information about you and have some ownership of it is really fascinating too, because right now that data exists sort of, but it's not yours. I mean, it's very weird that both the data about our financial lives and the data often about our health lives are like owned by these entities, not by us. And when we go entity to entity, we kind of like lose stuff and we don't have control over it in some way. And it feels very very strange in terms of how you think about the data about you and your history and what loans you've had, et cetera.
I've literally at least a half a dozen times have been in front of a bunch of younger people and had to tell them there was a time that if you switched phone companies, you had to get a new phone number, right? And they're like, "What do you mean?" I'm like, yeah, it's just like if you switched banks, today you start over, right? Accumulating, and the information they're going to get from you is whatever's in your credit score, your credit file. Other than that, it's a big gap, right? I mean, just imagine you start building a portable, self-contained kind of assessment of your financial health and your financial picture. It's validated, et cetera. It'll be fun. It'll be fun to watch.
Well, Curt, we are unfortunately running out of time, though. I've really enjoyed our conversation. I do have 3 questions I ask everybody at the end, and we kind of stumbled upon an answer to the first. So I'll ask you if you want to stick with it or get it, which is like, what's the best piece of career advice you've ever gotten? We kind of did a little career advice early in the conversation. But is there anything else you would add to that, or you want to leave that one stand as your career advice?
Well, I would say embrace change. If you're going to be in the financial services industry, the things that got us here aren't going to take us forward, as the saying goes. Mm-hmm. And the organizations and the people that can embrace change and be part of it, and ownership, right? We talked about earlier, right? The people would say, "Hey, I want to be a part of whatever change it is that's happening in the universe." That will get you ahead. Not fancy power.
I like it. There's your career advice. My second question is, what is the best piece of advice you've gotten about the consumer banking or consumer lending industry generally?
Oh, wow. Best piece of advice. Oh gosh. I probably that don't follow the herd. The money is to be made, right, in the stuff that's harder to do. All right. And that, again, this relates back to credit scores, right? If you can figure out how to lend successfully between, 620 and 700, you'll make a lot more money than the person that's lending only to 720 and above. Mm-hmm. So, the easy things are where people migrate, and then everybody fights over those same customers, right? The money's in consumers to be made, helping the people that need it.
Got it. That's great. Don't follow the herd. It's great advice. The common wisdom is what the stuff everybody knows, everybody does. So finding ways to do something different is where the opportunity lies. Last question. We've talked about a lot of future areas, but I'm going to ask you for one bold prediction about the future. What's a bold prediction you got about? I like to think of this as the thing I can invite you back, and then we can have a chat about whether you were right or wrong.
So my prediction really falls on something we've already talked about, which is this metaverse, right? Because I watch my kids, and look, I don't know how. I really can't define it. I'm not that smart, but I watch. Here's the telling point, right? First time I had Coastal World up on my laptop at home, and my son, who was 9 at the time, saw it. He immediately reached and grabbed my mouse and said, "Dad, you got to change your avatar. You can't go around looking like that." And knew intuitively how to do everything and navigate. He's asked me to try to come and play in Minecraft, and I can't even move around, right? He just follow me. And I was like, I can't, right? This is native to the younger generation, right? And I don't know that I'd say it's metaverse where we're going to be, but this kind of new world where you just kind of everything is digital and electronic, and you've got a mirrored personality, right? Because you start to see, even I read something the other day, fashion is following the metaverse, and the metaverse and fashion are together. And I'm watching my, daughter, my 12-year-old daughter, her avatars and the different things she does, and the way she dresses, right? It's the same. And I'm like,
yeah.
So I think there's a lot to be said in this space. I just don't know what to say about it. I'm not that smart, but I think, the future, when you look at 2030 and 2040, we're going to be living in a multidimensional kind of interplay that's going to be part of how we go about our lives. Just like I couldn't leave home without this, right?
It's it's interesting. I hear what you're saying. And I used to have this debate about, digital goods and why people want to buy digital, going to buy shoes for your avatar. Like, we got to buy real shoes for your feet, but you don't have to buy shoes for your avatar. What are you doing? And, when you really break down, think about it, somebody kind of made the comment to me the other day that kind of resonated, which was like, people spend a lot of money that's not just effective and it's like not optimized for the most cost effective way. You buy a watch because you want to make a fashion statement. You buy a different piece of clothing or a pair of shoes. You buy the cheapest pair of shoes. You buy the pair of shoes that you want to have and that say that's a fashion statement. And like, why would you think that when we move to a digital persona where so many of us spend so much of our time that you wouldn't similarly like buy the equivalent of a nice watch or a nice shirt or a nice hat or a nice whatever, buy a nice car. You don't just buy the car that's like the cheapest thing that actually effectively gets you to work. People buy the car that they want for whatever reason. And a lot of that is about, fashion and desire. And that translates to the metaverse. And you're seeing that really, I think, take off, where whether that's whatever version of the metaverse, your digital personality, you want to come through just the way you do your personality in real life through the things you own and the things you wear.
And
so
that's not new. I mean, I remember being in college and being really pissed off because I couldn't afford those shirts with the little polo horse on them, right?
A little polo, yeah.
Because that was the standard, right? And that was the status symbol, right? And they were expensive for the time. And that's the same thing about art, right? I mean, I have a good friend that owns large modern art gallery, and I've asked him, and he's like, well, I said, why would somebody pay that much money, And he's like, this is a world that exists. And you're questioning it fundamentally, like, yes, he says, my line is, do what really moves you from art. But the truth is, most of art is sold because it's a status symbol and people want to own a piece of that status symbol. It's image, and we pay for it all the time. So, yeah, I don't doubt it.
All right, Curt, I appreciate your time today. This is a fascinating conversation. Thanks for making the time and sharing your thoughts with the audience.